Before we immerse ourselves in the details, let's take a look at the peso right now. At its weakest in 12 years, in fact, you have to go back to June of 2006 to see where the peso was at this particular level. Now, this latest bout of weakness that you're seeing over there, where the pointer is pointing, Mark,
right.
You see it really started after the Bangko Sentral hiked interest rates on May 10. Now, I thought a BSP rate hike was supposed to help the peso's chances. What exactly happened here, and why the fall from grace after the BSP decided to pull the trigger?
Well, I'm glad to be here again. The last time I was here, I was saying, you asked me, is the BSP late in terms of pulling the trigger? I said, yes, better late than never. And I think that is also the reason why the peso didn't really rise after the BSP really raised rates, because they're just doing the minimum and they were already late coming into the ball game. So if, for example, they get ahead of it and become more forthcoming in terms of when they're going to raise rates again, and to show the world that they're in control when it comes to raising rates and controlling inflation, which has actually spiked to 4.5%, then probably you'll see peso to strengthen again. But the reason there is because they're basically delayed and the market knows it. And then even if they did raise it, it was just, well, you know, let's do this, let's see, to appease the market. They have to get ahead of it in order for them to take back control of confidence.
All right, and if that's the case, then is a potential rate hike down the road, which BSP Governor Spinelli has said could actually happen if the data warrants it. Well, does that mean that a rate hike down the road, if it does happen, might not do anything to help the peso's chances?
Well, it depends now. It's really about forecasting again and becoming more forthcoming with the markets. Another rate hike must happen, especially now because inflation still has to be under control. One rate hike in the Philippines might not do it. Plus the fact you have, you know, the complications with oil rising. And I think oil is a global concern, and it's going to push inflation up globally as well. Especially this weekend when there's going to be a meeting in Vienna where, you know, production output will be discussed. And also because of what happened to Iran, and production cut was there, you see oil spiking to about $60, $70 a barrel.
That's about WTI. Then you have Brent crude also hitting 80. But we've also seen oil start to fall in recent trading days, Mark, because of word from both Saudi Arabia and Russia that they're considering perhaps easing the oil output cut. Are people in danger of perhaps reading too much into this particular spike, or is the trend still upward for oil and thus perhaps detrimental for the peso?
Yeah, I looked at the trends. Long term, it's still going up. Medium to short term, right now, you're seeing a little dip, but I think that's a trend that will continue for a while, especially because monetary policies around the world, except for the US dollar, is very loose still, and you see prices of of commodities going to rise as well because currencies all over the world are weakening, except for the dollar.
Except for the dollar. And that brings me into that because so much of the fate of emerging market currencies like the peso rest on the dollar's chances. Here's what the greenback's been up to actually, if I can just pull up that chart here for you guys, for you, Mark.
Sure.
You see it actually on a rise since mid-April and really weighing on people's minds. This is also partially because of expectations the Fed is going to raise rates pretty soon as well. How much trouble is the local currency in given how strong the dollar's been over the last month and a half?
Well, the local currency we have is still, on shaky ground, as I said. As long as the BSP is not yet ahead of the curve and it doesn't forecast properly and be more forthcoming, the peso will still be treated like most emerging market currencies, which is uncertain. The thing that is driving the US dollar higher right now is actually expectations in earnings will continue to grow, as well as the economy in the US will continue to grow this coming. Well, today.
So it's not so much monetary policy related. It's actually earnings driven and economic fundamentals.
Yeah, in terms of monetary policy in the U.S., I think that's been baked in. I think 2 or 3 more rate hikes for the U.S. dollar is still in the cards. So that's baked in. What's really attracting investors right now is that all over the world, I think the U.S. stock market is still, something investors that want to go into. So people all over the world buy the US dollars to get into the stock market in the expectation that earnings growth for the equities part of in the US is still pretty good. And that's actually driving currencies towards the US. And that trend might continue, especially now because, again, if you couple it with the monetary policy that they're more forthcoming and they're projecting it better, I think it's a more stable path. Now, politics aside, I mean, the federal policies and the Federal Reserve in the U.S. is doing a better job compared to everyone else, because everybody, as I said in the last time I was here, is just following suit. They're waiting for the Fed to make the move before they react. And again, too late.
Too late. Now, we talked about inflation, we talked about the Fed. The other thing that people are worried about is this trade deficit. And it's coming at a time also when we're seeing geopolitical concerns about rising trade tensions on the table once more. We have US President Donald Trump saying, I might levy $50 billion worth of tariffs on China. And he's looking at metal tariffs on Mexico, Canada, and also the European Union. How are the Forex markets reading these particular developments with regards to trade? Because they are closely tied also to the state of trade flows in the world.
Well, let me talk about that particular. It's actually a bipolar reaction. Just like,
tell me more.
One day you get the U.S. President Trump saying, they're not going to do this, and then only to reverse it. And as a result, the market is really just also reacting in a bipolar way. And so what happens now is that the trade deficit might be, actually I read an article by Nomura saying that they forecast the trade deficit in the U.S. to narrow even further. So these moves are actually helping the U.S. narrow its deficit, right? Which again may also be, for me, the reason why the U.S. dollar is rising still, because the strength of that move, the trade deficit narrowing, and also with America First policies, and right now all the trade rhetoric coming out is actually showing the world that even though there is a lot of back and forth here, it's clear that the agenda is to strengthen the American economy by whatever means necessary. So I think that's also the reason. For me, the US dollar is still strong, and it will continue to be strong. I've been here for several times, and I think my forecast of 53 is still on the table.
Right. So 53, you're talking about 53 to the dollar by year end for the peso?
Yes.
All right. Mark, let's talk about other geopolitical risks. And one of the reasons also why the dollar index has strengthened in recent times is because we've seen a weakness in the euro occur because of all the turmoil that's happening there, especially in Italy. The inability to form a government there is stoking fears that an Italian exit from the EU might happen. Some people are calling it Quitally, some people are calling it Italy. Take your pick. But regardless, you'll see here that Italian yields have were actually spiking. We saw a flight into German bond yields, flight to safety, and you saw the euro actually start to wobble and weaken in recent days. Can you talk to us about your reading on the euro and whether or not these woes might seep into emerging market currencies like the peso?
Short term, you've seen the euro suffer because of the problems in Italy. But to be honest with you, I feel that that's overblown, like a lot of things that's happened in Europe. And I think that is some concern short term. Medium to long term, though, I think that will be resolved. There is a lot of problems and a lot of speculation. They're going two steps. Oh no, they can't form a government. And then the next step is, oh no, they're going to quit euro. And I think that's too far-fetched, and it's overblown at this point. And based on experience, you see some bad news, and you have this feeling that you wanna sell and short this particular asset, right? And then only the next day, some good news comes in, and then the bad news is negated, and then people just go back to risk mode. So I think this is one of those, episodes again in the forex market where the drama is short-term, short-lived, and I think in the medium term to the long term, I think the euro will recover.
So you still have high hopes for the euro in spite of all the volatility?
Personally, I'm still investing in euros, physically and online. I'm just waiting for the proper timing online. But physically, I've been accumulating euros.
Now, speaking of, you've seen the euro actually weaken and recover, but we've also seen a flight to safe havens benefit the Japanese yen recently. Let's take a look at how the yen's doing so far in today's open. You're seeing it there at 108.60 against the US dollar. Now, it's hitting Japanese stocks as we saw earlier at the open. But here's the thing also, remind you, the Treasury is also gearing up for its first samurai bond offer in June. Can you talk to us about whether or not there's significant forex risk to this bond offer that's coming in June because of the yen's recent bout of strength? Or is this also a fleeting thing that we could perhaps discount or keep to the periphery?
In the short term, the yen might strengthen a bit, but in the longer term, in the short term, the yen might weaken, but in the longer term, the yen may strengthen. If you look at the trends, the ongoing trends, it's really going down. This is the dollar to the yen, right?
This is the dollar to the yen, yes. Over the
So
last
the
10
dollar
days.
is going down against the yen because of safe haven plays. With all the uncertainty politically, you can't blame investors in buying the yen. Short term, though, there might be a bit of weakness in the yen. However, longer term, I feel that the yen will still strengthen. And that's one of the other currencies that I'm planning to accumulate physically as well.
Now, finally, Mark, can you give our viewers advice, or forex traders who are watching the broadcast right now, any advice on how to handle all of this volatility? Because if there's one thing that's certain is that there's a lot of uncertainty right now in the forex markets, and as we see, volatility in forex markets tend to be a little bit more exciting than we see in equity markets. How would you advise people to handle all of this volatility surrounding the peso and all these other currencies we just talked about?
Correct. Let's talk about it first short term and then long term. Short term, in and out. Definitely in and out because of the volatility. If you make money now, go out. If
you're talking about moves in the span of days, hours?
Yeah, span of days. That's very short term. In the longer term, I suggest that you hedge your forex portfolio by having a balance of safe haven currencies and risk currencies as well. So in other words, if you have one hand, you have the safe haven currencies like the Japanese yen, the dollar, and maybe even the Swiss franc there. And then on the other hand, you'll have the risk currencies, and that includes maybe the peso, even the pound, because of Brexit concerns as well. And you have, of course, the beta currencies like Australian dollar, New Zealand dollar, Canadian dollar. So you have to have an equal mix, a hedge, if you will, of both longer term, so that the price fluctuation, the volatility, surrounding our current environment now, which is the new normal, won't really affect the value of your funds. The reason why I say you have to hedge it, one hand safe, the other is risk, because if risk comes in, the risk currencies go up, safe havens fall, but the net value of your wealth is still intact. And if risk is off, the risk currencies fall, but the safe havens rise, again, your wealth is intact. And then if you're more used to it, then you can just transfer money from safe haven to risk when the time is right, if you are familiar with timing in trading.
All right, we'll have to see how all of that impacts forex markets, but the peso at 53, according to Mark So from Unlitrader. Thanks for joining us this morning
Always a pleasure, JP.
on Business World Live.